What's going on, everyone? Welcome to the Eternal Money Podcast. I'm your host, Freddie McKine, and joined as always by my brothers, Nick and Nelson. We are three regular 9 to 5 job employees who are on the road to financial freedom. We created this podcast to share our knowledge and opinions in investing with the hope of inspiring others to lead a similar lifestyle. We are also here to learn from each other and you, the listener. So please drop a question or comment at any of our social media outlets. Follow us on Instagram at Eternal Money Podcast. Follow us on Twitter at Eternal Money Pod. And find us on YouTube at The Eternal Money Podcast. Now, before we begin, disclaimer: we are not financial advisors. The ideas and opinions expressed in the Eternal Money Podcast and any of its guests are for general information and entertainment purposes only. Any reliance on the information provided in this podcast is done at your own risk. So please do your research. So now that we got that out of the way, how was your week,
What
guys?
up, Flip? Doing good, man. Good week in the market, I thought, and can't wait to chop it up with you guys and talk about it, man.
Yeah, man, it was a good week. Nice week in New York City. Worked hard, celebrated after 4th of July, but hey, we're ready to get this going, man.
Yes, sir. Yes, sir. Let's do it, Flip.
All right, in this segment, State of the Market, for the week ending July 8th, SPY went up 3.03%, QQQ went up 5.38%, DIA went up 1.83%, and IWM went up 3.68%. Fella, what are your takes on this?
Well, I'm gonna start off. I'm gonna break it down. I saw some good, saw some bad, and I saw some red flags. So historically, July is a positive month in the market. So I wasn't really surprised, coming out of the holiday with the bullish action, even though the Bears did try to take it down on Tuesday. The market opened down big time red, but the Bulls came right back. They held strong there, so that was very positive. Also, another good thing is that we saw finally some rotation back into the tech sector. So that's good. That probably happened because of the news that came out from China about the tariffs and stuff. They're gonna cut back on that, I think. And we saw rotation out of utilities, energy, and materials. So that's those are the risk off assets, and maybe people are trying to put some money back into the market, which is good. It's good. It's about that time. The bad that I saw, the bonds cooled off after a strong rally the past couple of weeks, and the commodities early on in the week, gold, crude oil, natural gas, they got crushed. But Thursday, Friday, they did level off, so that was also positive. So things aren't looking too bad right now. Short term, this could continue. You know. Now the red flags I saw for the things I look at, the skew was still low. The VVIX, the VVIX volatility of the volatility index, that hasn't been this low in years, in 2 years probably. And what else? Oh, the volume. The volume was way below average this week. So I don't like rallies with the volume this low. But I mean, it's summertime. A lot of professionals they're on vacation right now, so that could be a reason for that too. It might I might just be a little worried or scared, but that's what I saw, man. So I don't know. I don't know if you saw something different, Nick, or what. But what do you think?
Man, I gotta tell you, bro, that was well said, and I agree with a lot of stuff you just said. So, all right, so this is what I think. I think short term, I think the market's looking great, bro. If you're looking at the chart, you look at the S&P, you're looking at the Nasdaq, everything is going up right now. We're in a confirmed uptrend. So short term, the market looks great, but I think there's a few things to be conscious about. Next week, we have the inflation coming back, and we also have a lot of big tech. They're going to be reporting their earnings next week, so we could be in store for a little bit of choppy movement next week. But as of right now, the short term, we're looking very good in my opinion. Also, I think another thing, like you said, like the sector rotation, I think that's a good thing. We're seeing buyers and sellers come in, and money is coming in, it's coming out, and just like you were talking about. Tech got a nice boost this week, which was good. So, money's going into there and money's coming out of other sectors. We see the industrial sector, which right now I'm banging hard. That's selling off. So that's setting up for a good trade. But the sector rotation is looking good, man. But let's talk a little bit about as far as long term or a longer time period. I do think, like we were talking about last week, I think when the Fed talks about the interest rates in July, if they give us some kind of indication that those rates are going up again, I think we still have a lot of a lot of movement to the downside still. So another leg down is not going to surprise me. I don't think we're going to zero. I'm not going to believe that. You know me, bro. I'm always betting on America, but I think that just in general, I think another leg down in this market wouldn't be at all surprising. Wouldn't you say?
I agree. And you know what? As good you brought up the Fed and the rates because uh, the unemployment numbers came out and they came in actually good. Unemployment is pretty low right now in America. It came out way lower than what the analysts expected. So
Yeah.
that could be another reason why the Fed might say, okay, economy's doing good right now. The workforce is good.
Yeah,
Let's
sure.
keep raising these rates, and then that could hurt tech. That's what happened before when they started raising the rates fast.
Exactly.
Tech started going down. So if the unemployment continues like this, it's gonna make it easier for the Fed to keep hiking these rates.
That's right, man. That's right. So I think we're still in line for some choppiness. And I mean, even with the spy and the Nasdaq going up a little bit, we're still kind of still in the zone, right? We're still in that chop zone of up down up down up down. We got a little leg right now, but man, is it gonna last? Are we gonna get back up to those 415 zones, which is the next level up? Are we gonna see that in the spy? I don't know, man. But as of right now, like we said, the both of us agreed, the short term we're looking good, baby. So let's let's see if the leg continues to next week.
I mean,
Oh,
yeah. I mean, in a bear market, there's always going to be a vicious rally or two. So I mean, you got to ride that rally up. You know what they say?
hey,
You got to stay in the market, even in the bear market, because if you miss those rallies, it hurts you in the long term in your portfolio.
exactly,
You know what
bro.
I'm saying? So
Exactly,
you have to stay in.
exactly.
You have to keep investing, and stick with it.
Yeah, man, you have to. You got no choice, but you got to hold tight. And a uptrend is an uptrend until it's not. So if it's going up, ride the thing. So especially for you option traders, that uptrend is key, baby.
I mean,
So
that's where you can make a lot of money if you're on the right side.
that spread, boy, that spread. So yeah, that's what we're looking at, man. Let's see what happens. But overall, I'm pretty optimistic right now as far as short term.
Agreed. All right, Flip, what you got?
What you got, man? What you got?
All right, fellas. In this next segment, Buy Zone, Nick and Nelson will go over the following: weekly buys, open trades, and profit taking. For those of you that are new to investing, this is a great opportunity to get yourself familiar with the different companies that Nick and Nelson mentioned so that you can begin your research and investment strategy. So, who can start us off?
All right, I'll start. I had a light week this week. I've been trading in my Roth IRA just because the past few years I was trading in my margin account and Uncle Sam they killed me, man. They killed me with the taxes. So I'm like, you know what? Let me not uh make a lot of taxable transactions. So I'm in my Roth right now, mainly trading light. Keeping my risk in check. I'm trying to build that up too. So I only placed a couple trades this week, one day trade and one swing trade. The day trade was on Tuesday. It was on the SPX. So the SPX was chopping around all day after it opened down. It came back, leveled off, and then it was just consolidating. So I took a neutral chance. Didn't work out because right after, literally maybe 30 minutes after I placed the trade, the market like the bulls just started ripping the market.
Oh man,
So
man, oh man.
that I mean it happens. I thought they were just gonna stay chopping till the close, but I was clearly wrong. So that one was a loser, full loser. And then when I place these trades, I keep them small. I risk between 300 and 400. That's usually my max loss. And then I'm looking to make anywhere between 80 to $200.
That's just like you were talking about last week, hitting those singles,
Yeah.
singles,
So
singles, right?
unfortunately, this one was one of my bigger losers. It was 380 because the spread it finished completely in the money. So I took a full loss on that. But I mean, that usually doesn't happen. So
Real quick, for the people that don't know, can you go a little bit into detail about what in the money means?
okay, so when you buy and sell options, right? The option you buy, it has a price to it. It's called the strike price, right? So then if the stock or the index, whatever, if you have a call and the stock goes above the strike of your call, that means that the stock closed in the money. So that's good if you buy an option. If you sell an option, that's not good, which is what happened with me. I had sold options. So when you sell options, you could only make whatever you sell them for. It's basically like when you sell options, you're basically like an insurance company, right? You're betting that a big accident is not going to happen, and that's exactly what happened to me. So I was betting that the market, the S&P 500, it was going to stay between these two strikes. A big pile up came. The bulls came and they pushed the market up above my strike. I forget what strike it was. I had the 3805 calls, and I think the market closed at 3830. So the market closed over 25 points in the market. But like I said, I keep my risk tight. I bought the 3805. I sold the 3810. So that means that 5 point spread. That's the most I can lose, $500. Doesn't matter if it goes to 10,000. I'm not losing more than that 500. But then when you sell options, you collect a credit up front. So I collected $120. So then my max loss, you minus the money you collect from the spread. It was a 5 point spread, $500 because each point is $100. $500 minus 120, so 380 was my risk on the trade. And like I said, it closed. The SPF closed easily 25, 26 points in the money. So if you don't have that, if you don't have that long option that you buy, then it could get. I would have had to pay out like thousands of dollars. You know what I'm saying? Because every
Yeah,
point that it's in the money, that's $100. So that would have been a $2,600 loss instead of a $380 loss.
yeah, right, right.
So that's why I mean I especially in your IRA, they won't even let you sell naked calls in there on a product like that unless you have millions of dollars in your IRA.
Okay,
Especially
okay.
the SPX, because the SPX, that's the biggest product there is.
Kind of helps you manage your risk too.
No, yeah,
Kind of unintentionally, right?
no, you have to. You have to. I mean, especially in your IRA. I mean, that's for your future. So you don't want to
Yeah,
get
you don't want to blow that
you
out.
don't want to get too risky out there. So I mean, you can sell puts in there if you want to buy the stock lower. I mean, but we'll get into that another time.
Yeah,
But
yeah.
that's what we did with that day trade. That was on Tuesday. Full loser, unfortunately. I'll try to get some winners coming next week. And then my other trade, I noticed the Qs, the QQQ, they rallied hard this week, up over 5%. So when that happens, and it went over its expected move, and basically what the expected move is what the options market says, or what they're predicting that a stock or a ETF product is going to do that week. So I think the expected move was about $5 or $6, and I think the Qs they were up like I don't even remember exactly how
Yeah,
much
it
it
was
was,
a nice rally,
but
big
it
rally
was
this
over
week.
5%. So they
Yeah,
they didn't predict that. They probably predicted 2.5%. So when it
yeah.
goes when a stock goes over the expected move like that, I usually look to for it to cool off in the next few weeks. So I placed it's called a ratio butterfly. I mean, it's just a combination of options being long and short. So it's a lot to explain. If you want me to explain it, hit me up on Instagram. And I'll break it down easier. For you. But yeah, that trade is 24 days to expiration. It expires in August 1st, and I collected $57. My max loss is $143 on it, and I'm looking to take $35 to $40 out of it. I could get lucky if the Qs move up, slowly. They grind towards my strike, the 303, but I don't expect that to happen by expiration. So I'll just be looking to get out of there with my 60 to 70% profit and keep it moving. So
Hey, I'm happy with that. 60, 70% profit, bro. I'm happy with
yeah,
that.
30. I mean, 35, $40. You could buy. You could keep adding to your shares and stuff. So
Exactly.
you know,
Exactly.
that's like
Keep rolling it forward.
I'm just trying to like get money, kind of like dividends.
Yeah.
So
Now, do you like to roll some of that profit into longer term plays? Is that what you like to
of
do?
course, yeah. I mean,
Deal.
yeah. That's the point. I mean, you got to keep building that account. I mean,
That's
and,
right.
unless I work more, it's hard to put more money in there. So
Well, that's the exchange, right? That's the exchange. What are you really going to do? You're either going to work more, or you're going to take your
yeah,
profits from your active money and put it
yeah,
into longer term
and
trades.
yeah. So when I
You know,
sell options, I always like try to take profit early. I don't want this trade to go all the way to August 1st. I put it
right?
on for there to just give me time in case I'm wrong, this week. But
Yeah,
usually the
right.
market, it goes up and down. So in one of those
Hey, man.
downswings, I'll probably be able to take that profit off. Take the trade off. I mean, I don't know. By expiration, the thing could be fully in the money. It could be a loser, but that's why you
Yeah,
set a profit target to get out early, so like that you don't have to deal with it.
yeah.
So and plus the assignment risk comes into it, and like I'm not dealing with that. So
Yeah, man. I think also with options right now, I think your game is to, in my opinion, your game is because of what's going on in the market. It's to get green and don't wear out your welcome and get out. Go green and get out.
yeah,
Take your profits and go.
quick profits, man. Especially the
That's
way
what it
this is going
is.
right now. The volatility is crazy. So those were my
Yeah,
trades. Yeah, my philosophy is keep the risk tight and try to get your profits quick. So
love that, bro.
hopefully that's what we're gonna do here. So I mean that's all I did this week. I'll be looking out next week for more trades, and I'll keep you guys posted, man. You got to check in. So
You
with that
already know,
said,
boy.
let's hear about these dividends, man.
Yeah, man, and my policy, bro. Every week, it's try to find quality, undervalued dividend stocks across all sectors. So what I do, I go through my portfolio, see what's setting up in my setup, which we call a stage one after some consolidation, a drop. Usually that means it's undervalued as well. And then I try to get in there and buy some. So let's take a look. Let's see what we did this week. Now, I got to tell you guys, we talked about this. You know what's coming. So last week I had Altria on my list, and hey man, I had to get in there this week and buy some more shares. So my first buy was on 7.5 right after holiday, and that was Altria, ticker symbol MO. And like we talked about, they've been in the news recently for having some problems with their product Juul, which is an e-cigarette. So they're in the middle of that. So the stock prices come down like 8 or 9%, and it's kind of consolidated to a zone where it's kind of trading in the same area for the past few days. So I went in there and I scooped up some more shares. So I got 2.4 shares. I put $100 in. I was able to get it at $42.18, which is a great price in my opinion. And that gave me an 8.74% dividend yield and just under $9 in income. The next one, this was the next day, which was Wednesday. We got Patent Park, which was on my list last week. That was on my watch list last week. That's ticker symbol PNNT. I got 16.2 shares of that. Another $100 in there. I got it at $6.16, which ended up being a 9.42% dividend yield. And again, just under $10 on the income. Now, I'm just going to speak a little bit about PNNT just so people know. PNNT is a business development company. So what they do is they go around and they try to develop and help small to mid-sized companies get off the ground and improve their operations. So that's my business development company play. So PNNT is a company that I believe it's a great company. Go to their website, check them out. They're doing some cool stuff. So I feel confident in them. I've been with them for a few years, and I'm going to continue. So that's my play for PNNT. What was the next one? The next one was Thursday, and that was my industrial play, which is Caterpillar, ticker symbol CAT, and I got 0.56 shares of that, $100 into that. I was able to get it at $177.04. Small yield on this one, 2% or 2.72%, and that gave me just under $3 in forward income. And then earlier in the week, I added to my index fund, which is in my Roth IRA, and that's the S&P 500 Vanguard fund. That's VFIAX, and that was zero point 0.7 of a share there, $125 in. at $353.86. Very small yield there. Typically, the indexes are. That was 1.44% dividend yield, and very small. That's just under $2 in forward income for the year. So in total, I put in $425. My yield that I was able to capture on my money was 5.58%, and then I added just about $23 to overall to my forward income for the year. So overall, it's small little gains, but we're happy with that, man. And what I especially like is that for the week, I was able to get 3 payments of dividends for the entire week, and that equaled $202.93. So if you think about it, I put in 425. My portfolio met me with $200, and it's just more to compound, more to incur, and I think overall a big win this week for dividends for me.
Nice.
So that's the deal there, man. That's the story.
Good. I mean, I never heard of that PNNT, man. I gotta do some research on that, man. That sounds like a cool company. So I'm definitely gonna look into
Yeah,
that
man,
one.
real cool. Yeah, man, check them out. The yield is just ridiculous right now. I mean, I'm not a yield chaser. I'm more so looking for the zones, but it's dropped significantly. So the yields, usually business development companies, the yield's higher, but this one is just inflated because the prices come down so much. So if you can get in there and scoop up some shares and lock in that 9%.
Is that kind of company? Is that similar to a REIT or no? Not at all.
Not similar to a REIT. They do have requirements as far as how much they need to pay out.
Okay.
It's not up to 90% like a REIT. They don't have to give out 90% of their earnings, but not similar. There is some tax advantages to business development companies, but that'll be for another discussion. But definitely, business development companies are absolutely great to diversify your portfolio. So definitely look into that. Do your research.
Dope.
Nice.
Yes, sir. Yes, sir.
All right. In this segment, Watchlist, Nick and Nelson will go over the following: potential opportunities for next week and where to deploy capital. As I mentioned earlier, for those of you who are new to investing, this is another great opportunity to get yourself familiar with the different companies that they mentioned so that you can begin your own research and investment strategy. All right, please start us off, gentlemen.
All right, so I'll start. I'll just piggyback on what we were just talking about. I think that, especially for dividends, I think when prices come down, it's essential, right? It's absolutely key. So that's why, like we were talking about in the state of the market, things like sector rotations are 100% necessary for a dividend investor because you got to get these levels and you got to try to lock in different yields. So when you're compounding, your yields are there so you can increase your dividends as you go. So as we said, the industrial sector has been the most recent rotation, right? So if you look at the chart, pretty much all of the industrial stocks, they have the same chart. They've sold off and now they're moving sideways, and we call that a stage one. So I typically, in my buy and hold, my dividend portfolio, I only buy stage ones. Okay, so on my watch list this week, I'm going to keep MO on there because if it's still at the same level, I'm buying more. And I think I have a dividend coming in from them on Monday, so I got to check that out as well. So MO is definitely still on my list. MO is a tobacco company, if I didn't mention that already. So that's definitely on my list. And then I'm going to go into my industrial plays. I added to Caterpillar this week, so I feel good that I gave a little love to that. The next two that are on my list in that sector is going to be 3M and Honeywell. So those two have been hit pretty good, especially 3M. My goodness, I was buying 3M during the midst of the pandemic, very very low. So my cost basis is very low, and I'm still up a pretty good amount, but one of my biggest positions. So I always love adding to 3M, and I think this is a good opportunity for all industrial stocks. So 3M, Honeywell, and MO are on my list for next week. Now, just so I don't forget to do this, all the stocks that I just spoke about, Altria, MO, Patent Park, PNNT, and Caterpillar, CAT, S&P 500, that's VFIAX, Honeywell, 3M, and I mentioned Altria already. All of these stocks I own and I have long positions on. Now, what do you got?
Yeah, I got a couple bullish ideas. My biggest one, I think, is Tesla. That Twitter deal was terminated on Friday after the market closed, and I think Tesla even rallied after that too. I think I was looking at the chart after, and I said, "Whoa, it was up $20, $30 after hours." So I'm like, "Whoa, why. I didn't know why. I was just looking around, doing some research. And then I said, wait. Then I researched a little. I saw the news that Elon backed out of the Twitter deal. So
Yes, he did. Yes,
I
he did.
like that. I like that for the stock for Tesla, and also to back that up more, there's a squeeze on the daily and the monthly, and it's over the 20-day exponential moving average. So I love all those technicals right there to back up that play. And another one in the industrial sector is Raytheon RTX sitting over that 20, and if the industrials, if the market continues to move up, I think industrials will follow suit, and that's my reasons for that. And I was going to mention about 3M. 3M is such a good company, man. They make so many products, so that's definitely a good one to have in your portfolio.
I love him, man.
I had it in one of my portfolios a few years ago. I was saving up for the car I currently own, and I was just putting money in the market, and I had all these blue chip companies in there, and like 3M was one of them. So it did good. I wasn't able to save enough to pay for the whole car, but it helped out a lot,
That's good.
Yeah.
Man.
So
Like, come on, bro. Post-its. Like, come on, man.
that's what I'm saying. And all the scotch tape and all that other stuff, stuff
You know
people
what I'm
use
saying?
all the time.
Like Post-its are here to stay in the world.
How long have these products been around?
Dude, and they'll be around after me and you and Flip are gone. They'll still be around. Put Post-its on things. Like,
yeah,
I'm telling you, man.
I always love Post-its. I don't know if any of our listeners will get this, but it's from Sex in the City. One of the girls from Sex in the City, she got dumped, and like the guy dumped her on a Post-it. She was like,
"Oh shit,
he dumped me on a Post-it." Like, I don't know. My wife always gets a kick of that because I always bring it up. That's like the only line I know from Sex in the City.
There's somebody laughing right now.
Yeah. I hope somebody gets that reference. But yeah,
right.
Yeah. So those.
Yeah, we're not giving ideas to anybody. Don't be doing that.
Yeah, right?
Doing that.
Yeah. So anyway, those are my ideas. Tesla and Raytheon both to go up in the coming weeks.
Nice, bro. Solid plays. Solid. Very solid.
Let's hope.
All right, Flip. What do you got, man?
So for our next segment, our topic train for this week is budgeting.
Oh, it's a good one,
fellas. So my question to you both is: what questions do you ask yourself when building your budget, and what does your budget look like?
Okay, so I'll start. But you know what? Before we start with the budgeting topic, I want to go back to last week when we talked about debt. I want to address my credit card comments from last week. I'm getting some feedback, some flack. I never said last week, because people are telling me that they must have heard, I don't know, in their mind, that I said nobody should use credit cards, and I never said that. What I said was that I decided for me and my family that we're not going to use credit cards anymore because of moral reasons.
Sure.
So and the data backs up my reasons, right? So I was looking it up. People say, all right, I could use my credit card because I pay it off at the end of the month. I'm like, fine, that's okay. You have no problem. That's good. If you have that discipline, use your credit card and get those points, right? But
I agree.
But I was looking at the data, and it said only 45% of consumers in America pay off their credit card in full every month, right?
I can't believe that. I can't believe those.
So think about it, right? So those 45%, they're getting their 2%, their 3%, up to their 5%. I know. I have a Discover card that every quarter they give you 5% if you spend a certain amount of money in certain things. Could be supermarkets or gas, whatever, right? So I'm like, fine, those 45%, they're killing it. I mean, they're doing good. But then I look at the other 55% of people, right? 55% of people, they're not paying their credit card in full.
That's the flip.
So, and the interest rate on new credit cards, the average is 18.97%. Okay, 18.97%, right? So, I mean, if I'm the bank, I'm taking those odds every week, right? So, all right, say 45% of the people, they pay off their card. Okay, that's good. I got to pay them 2, 3, 5%, whatever. But 55% of people aren't paying off their card, and they're paying me on an average. It could be different. It could be up to, if you have good credit, it could be as low as 13, 14. But those store cards, they charge you over 25% to interest. So I'm if I'm the bank, I'm taking that spread all day. All right, the 45% that are paying me 18%, they'll pay off that 2, that 3, that 4, that 5% to those good credit card users that paid off every month.
That's
But
right.
what about that other 10%? That's where the banks are getting rich, man.
That's where they're making their money.
And even with the ones that the first 45% to even it out, they're still making a 12, 11, 12% spread. It's like they're doing better than the S&P by offering this reward,
every year
by offering these rewards. Like, you know what I'm saying? So it's
every
like
year. And then people also they max out one card and then they go to another one. So now you could have a 25% on one card, then a 27% on another card, then a 15% on another card. So what are you doing? You're just averaging high interest into what?
yeah.
Just digging yourself deeper.
So like I just wanted to clarify that I never said nobody should use a credit card. But I've been getting people telling me, or not even telling, like kind of like sending me videos and stuff, like about people that say like you shouldn't, that you should use credit cards. I'm like, I don't know why you're sending me that. I never said you shouldn't. All I said was that I don't use it, So
sending shots at the
yeah,
kid.
no. So it's like I just want to.
It's all right.
I want to clarify. I just
Hey man, we welcome the opinions.
No,
too,
hey, listen, that's what makes a show great. Everybody has an opinion, so I welcome the feedback, and I'm just defending what I said. And yeah, so the banks, nobody's beating the banks. If look at their building and look at where you live. All right, their building's way bigger.
Great point.
Their
Great
their
point.
building's way
Great
bigger than
point.
your house. All right, so that 2%, that 3%, 5%, maybe it's making you happy at the end of the month, but you're not beating them. And look at your friends and family, the ones that don't pay off, because like if there's 55% of people that don't pay off their bill in full every month, that we all know 5, 10, 5, 6 people that don't do it. You know what I'm saying?
Oh, you already
So
know.
that for those reasons, that's why I stopped using credit cards. I used credit cards for a long time. I mean, I got my first credit card in like 2011, right? And then I finally stopped a few months ago. So I love credit cards are a good tool. Like if you could buy stuff if you have the money, get the points. Like say you have a business, you could buy merchandise on your credit card, and then you sell it for a profit. You pay off the credit card, you keep that profit. You don't have to use your money. That's great. There's many uses for credit cards, but
I mean that's the name of the game, in my opinion.
of course,
get yourself a reward card and use it correctly.
If you use it like that to help you, make profits and stuff, hey, it's a blessing. But we're this podcast, we're talking about irregular, everyday people trying to be financially free, right?
That's right. And get your money right. Get your money.
So
right.
we're not going to promote consumer debt here. We're not going to do that.
Go somewhere else with that. Go to the next podcast with that, boy.
Right. So,
I mean, hey, but like we talked about last week, there's a difference between good debt, bad debt. Of course. Tapping into the good debt, we're okay with.
That's it.
Tapping into that bad debt, you gotta
say, hey, you buy some real estate, you get some renters in there. Hey, that's great. That you know what I'm saying. They're paying for your house, they're paying for your property, and you're making some extra money. Hey, do that all the day. I'm with leverage. I trade options, so I'm not. I love leverage. You know what I'm saying?
That's right. That's when That's when the bank is your friend.
Of course.
In those situations, the bank is your friend. But if you are the one paying the interest, the bank is your worst enemy.
You're an idiot. If you're paying all that interest, you're an idiot, right?
Exactly. So you got to decide what relationship you want to have with the bank. You want to be their friend, borrow money from them to make more money, or do you want to be on the other side? Do you want to be the consumer that's paying them interest and is paying someone like me dividends to own companies that pay dividends?
Exactly. And just remember, the spread the bank makes on these credit card interest rates is higher than the historical average of the S&P. So I'm gonna leave it at that. And my bad, Flip. Can you ask that budgeting question again, please?
Before I ask that question, I gotta give you guys a quick update. I gotta give the people a quick update from last week's episode in our topic change that the Flip has paid off 70% of his credit card debt.
Wow,
What?
Flip,
70%.
70%. I'm gonna give you a round of applause for that.
Bravo,
boy.
my brother.
Round
Hey.
of applause, man. That is
That's
excellent.
a hell of a
Flip.
job, man. Hey,
I just want to thank
that's-
everyone
that's-
who.
Damn,
I
Flip,
want to
that's
thank
dope.
everyone who.
You know what you need? You need like those YouTube plaques that people get, like when they have like a certain amount of views or a certain amount of videos. You need one of those plaques on the wall. Like, yeah, paid off this debt, man.
Go fund me. Nah, never that.
That's really fire though. That's dope.
It
That's
was
really
from
dope.
Mackay
That's it,
Management
man.
Group, a consulting company. That was how I was able to pay. Just long nights, Luckily,
The Flip is getting rid of those ball and chains, baby.
That's it. Little by little, man. Little by little. That's the name of this game, man.
30% left.
Slow and
That's
steady.
dope though, Flip. That's dope, bro. Salute to you. That's
Thank you.
awesome,
Proud of you,
bro.
bro.
That's really
Proud
great.
of you.
That's
With
really
you
great.
guys, soon part of my journey.
You know what I'm saying?
All right. So the question again was, what questions do you ask yourself when creating your budget, and what does your budget look like?
All right, so couple things. So most of the regular people, let's say, right, like us, most of those people, their budgets, they don't really have a budget. They get paid, they pay you off everything they owe, and then if there's any money left, then it's for them, right? So that's what we try to avoid. We want to have money to invest over here. So we're always gonna pay ourselves first.
Love that, bro.
10, 15, 20% minimum. Even more is better if you can. So that's what we like to do here. That's the first thing I think about. It's like, all right, I got to invest, and then whatever's left over, all right, I'm going to pay my bills, obviously. The key bills, everybody's going to pay.
Bro, you see how funny this is? This is so funny. It's like you're saying, like, all right, I'm gonna invest first, and then I'm gonna live second. Like that's an investor right there, man. That's an investor.
I mean, so think about it. What are they gonna do if you owe somebody? What are they gonna do? They're gonna call you. They're gonna keep calling you. Like, just don't answer the phone. Who cares? You'll get to them when you can. Obviously, I'm not talking about where you live or anything like that.
Right, of course.
But like even if you can't pay the cable or something, this month for their Wi-Fi or it's whatever. What are they gonna do? They're gonna cut your cable? No, they're not. They want you as a customer. I know people like they go like 3-4 months without paying their bill, like their TV bill and stuff.
What?
Yeah, it's like whatever. They don't even care about that. So they're not gonna cut you off, bro. At the end of the day, they want your money, so they're gonna bother you. They're gonna be a pain in the ass, but what are they gonna do?
We don't condone.
No,
that
we
here.
don't. I'm saying, pay yourself first,
That's right.
so you
that's
can
right.
invest and build wealth, and then pay your bills.
Be
Pay your
fiscally responsible.
housing,
Sure.
pay
sure.
your transportation. You need gas in your car. You need to eat. You gotta get food. That's key. If you got kids, that's more food. That's more diapers and stuff. So that's usually when I start thinking about a budget. That's how I look at it. I'm looking at how can I use my money wisely to get wealthier. First, then I pay my necessities, and then I'll save for if I need to buy something or a vacation, whatever. That's not a big deal right now because I have small children. So like where am I gonna go? To the park? I'm not going anywhere far with them. You seen those families out there with little kids. They're annoying. You know what I'm saying? I don't want to be that family.
Don't be that guy.
You know.
Don't be that dad.
You can't be bringing that riffraff.
And plus, like you know how kids are. They see something, they want it. Like even though they're never gonna touch it again. They're never gonna touch that toy or whatever it is.
Right.
They see another kid with it. Oh, I want it. A light, like a blinking light or something. They see something flashy, like, oh, I need it. So I don't try to really go to many far places with my kids. So right now we're saving on that. Plus, a newborn is coming, so
Congrats.
we have to save even more for that. So
Yes. Congrats to the kid, baby.
So then, what was the second question, Flip? How's my budget? You said. All right. So like same thing. I check my income for the month, and then I have lines: investing, housing, debt. The only debt I have is the car right now, thank God. So, and everything else, the bills everybody has, their cell phone, all that shit has to get paid off, and then also side money. And that's basically how I do it, man. It's not that hard, but the key is to keep track. Like at the beginning of the month or beginning of the week, however you do it, set a number that you're gonna use on that, and then stick to it. Like write it down, and then keep track of it. When you go, if you swipe your debit card or whatever, you're gonna get it in your bank account. It's gonna tell you, all right. So if you put for this week, you put 100 or 200 bucks for gas. I mean, I don't know how much people drive, but once you get gas, go check your app. All right, I have this much money. Subtract that. There's apps that do it automatically for you. So for lazy people like me, like that's what I use. I use the app. All I have to do is type the number in. Like, oh, all right, I spend. I mean, I don't even know how much gas is now because it keeps going up. But it's like,
Yeah.
Too damn
yeah,
expensive.
I paid 60 this week, and then boom. So that's how I go about making my budget. And then yeah, and then another key is if you're
I was about to
married
ask you
or
that.
yeah, if you're married, then I think it works better if you budget with your wife or your significant other. You know, uh, me and my wife, we're working towards that. We we've actually like we've been married for almost 4 years, but I feel like we've been living like roommates. You know, as far as finances are concerned, because we never mixed our. We have like a joint savings account, but the everyday expenses we have separate accounts for it. So like her check, she gets it, goes in her account. I don't know how much she makes. Mine, it goes into mine. She don't know how much I make. She probably knows actually. She probably,
You know,
you know
she's
how
got
women
She
they
got your phone.
they find out everything.
Yeah, you know,
They're
you know.
detectives, so
Somehow,
yeah.
some way.
So yeah, we're working towards putting our finances together because I feel like that'll help us get to financial freedom even faster
sure.
because we'll
For
have
sure.
more money to invest, and
Yeah.
everything.
It's
So
like,
she's a little wary about it. That's how women are. I mean, I get it. There's a lot of stories out there where people had joint bank accounts and then one of them wipes it out, like they have a gambling addiction or a drug addiction or something,
sure,
or they
sure.
just break up and then like one of them just takes
What do you do then,
one of
right?
them they
Cashes
take
out.
all the money out or something, So it's
Yeah,
like
yeah.
I understand that it's not for everybody. I've never done it, so I mean I'm a little hesitant myself, but I'm looking at the bigger picture. It's like when you look at the market, you got to think the future. You got to always think about the future, right? It's my income
For
by
sure.
itself, because like when you think about it, it's not myself anymore. I'm married. I'm gonna have 2 kids now. Oh, and that's another thing. Mentioning my kids, already saving for college before they were even born. As soon as my wife told me she was pregnant, boom, I opened up a savings account for them. And I put money in it every week.
That's
You know what I'm
fire, bro.
saying?
That is fire. Drop the bomb on
Yeah,
that one,
I
Flip.
mean,
That's fire,
listen.
man.
So yeah, Alex. He already has 5 figures in his account. He's been blessed because like every time somebody gives him a gift of cash, that goes right in their account. And like I buy some stocks for him and stuff. I'm not gonna mention what's in there because I don't want people to judge it. But yeah, I mean, we were mentioning last week about the debt. I don't want them to pay for student loans. When they get that age, so you got to start
Sure,
early, and
sure.
the earlier you start, we know the power of compound interest, right? So
Yes, sir.
that's what I do. That's how I go about my budget, and yeah, man. I mean, hopefully, every people got something out of that, right? What about you? What do you think about that unit?
That was good, man. That was really good. I think that was very valuable what you said. Very good information. Yeah, it's very similar. What I'm going to say is very similar, and it kind of aligns with what you're saying. So, what I think is that budgeting to play this game, to play the game that we're on every day, I think budgeting is probably the most important element to this game.
Absolutely.
Wouldn't you guys agree with that?
Yes, sir.
And I think to be able to be in control of your budget and to stick to that budget, I think it brings so much value to the way you approach this game and the level of success that you can have. And I believe that budgeting, it comes down to, you have to be able to know what's coming in and what's going out, because that's the first thing to identify. You got to know, what is your income, how much money you got coming in. Then you got to know how much money you got going out. And I'm talking about to the cent. Every time that I work with somebody with their budget, or I give them suggestions, I'm not a professional, but I give them suggestions, I always tell them, you got to hit every single little thing in your life. Even like whatever. Like you have Netflix, $7 a month, Hulu, $5 a month. You go over a few tolls every month, $20. There's got to be a way to track every single expense, because what you need to do is you have to decide what's coming in, what's going out, and what is that margin in between, right? That chunk of money in between the money that you need for your bills and the money that you don't need. That chunk of money is what's going to get you to build your wealth, right? There's a famous quote by a gentleman named Jim Rohn. He says, wages are great. Wages will pay your bills, but profits are what's going to make you rich. That's what's going to build your wealth, right? So basically, he's saying you got to get a chunk of money in there that you don't need that you can put towards investments to build your wealth, right? If you're living paycheck to paycheck, there's only so much you can do. So you either got to get out there, you got to make more money, right? But then you're giving away more time. You got to do something with business, or you got to find a way to cut your expenses in your budget, identify everything, and be able to control or create some kind of margin, some kind of space in between the money you need and what you don't need, because that's the chunk that's going to get you rich. But you're only going to be able to do that if you budget yourself, if you know what your numbers are, and as we know in this game is all about consistency. You got to be consistent. You got to be consistent in the money you make. You got to be consistent in the way that you approach your investing, and then you got to be consistent 100% every day. You got to be consistent with your budgeting, right? Now, another point that I want to tie into this is that I think that it's also important to know that you got to be able to live under your means, right? That's the only way to do this. If you're living paycheck to paycheck and you don't have any margin, it's going to be very hard for you to play this game. I'm going to be very honest with you. So you got to be able to find a way to live under your means, below your means, as they say. And then also you got to be able to find a way to live of a certain percentage of your pay, right? I've always heard that 20 to 30%. You got to be able to live on 20 to 30% of your income. And now, I'm not saying forever, right? Once you're a wealthy person, you're to the point where you're comfortable, you don't have to live that tight. It's only a season in your life that you're going to dedicate this, 5 to 7 years. That's what's going to lay the base for you to become wealthy. So, like I said, all those things together with the consistency and getting your life in control as far as living below your means, and don't live this crazy overinflated lifestyle and then wonder why you don't have any money to invest. If you get all that stuff under control, then you're in good shape, and that's my belief on budgeting, and that's what I do every day. Boom.
Great
Thank you,
job, man.
fellas.
Let's go, baby. Let's go. Flip, drop the
Right.
bomb on that one, boy.
So that wraps up our show for this week. Thanks for joining us on another episode of the Eternal Money Podcast. Please don't forget to rate us, leave a review, and share this podcast if you learned anything or know anyone who would find this information helpful. Once again, please follow us on our journey to financial freedom by following us on Instagram at Eternal Money Podcast. On Twitter, follow Eternal Money Pod, or find us on YouTube at The Eternal Money Podcast. Please stay tuned for our next episode. Let's see if the Bulls run out of gas this week, since we have some big earnings and inflation numbers coming. So remember, create your budget, do your research, and plan your strategy. Have a great week, everyone.
All right, guys. Thank you so much for coming by, stopping by, listening, and watching. We hope to see you guys next week. We appreciate everything, and we hope to continue to bring you guys value. So we'll talk soon. Peace.
All right, and before we go, I wanna give a shout out to our host, Flip, and his wife, Mrs. McKayan, on their
Thank you, my brother.
3-year anniversary they just celebrated the other day. Yo, congratulations, man!
Yes.
I can't believe it, man. Like, knowing you so many years, you've been married for 3 years, bro. That's insane, man. So congratulations to you.
Flip is out here, baby.
Congratulations to her, and hey, she's doing good with you, man. I mean, she's keeping you in check. I never thought you find a woman like that. So
Financially responsible.
me.
and
God bless
creative
her.
Flip's budget. By
Yeah,
the way.
You know what I'm saying? We
I
love you,
appreciate
Flip.
it,
You
my
know
brother.
that.
So yeah, congratulations again, and yeah. So for this week and moving forward, just hey, keep your wrist tight. Don't trust the market too much, and have a good one. See you next week.